Hey everybody, Larry Berman here, live in Leafs Nation. For all you other Canadians out there, and Americans for that matter, that aren't Leaf fans, you better get on board. This is the year. Been saying that for 57 years now. Anyways, okay. What happened in markets this week? Well, obviously, when we recorded last week, the invasion or the attack on Israel hadn't happened yet, and that changed the dynamics of a lot of things last week. But overall, you would not have expected, the equity markets to be slightly positives. There were obviously some down parts of the market. You wouldn't have expected that this week in the aftermath of what happened there. The ongoing probably very long conflict in Israel. Anyways, we'll unpack a little bit more of that as we get into the chart room. It's often difficult at a time like this to give investment advice when parts of the world are starving and hoping they live 24 more hours. My best friend was actually in Tel Aviv when the bombs started dropping, and spent I don't know how much time in a bomb shelter waiting for a plane to get out of there. And anyways, they're safe now. A lot of family and friends there still, and listen, we hope for peace. It's a tragedy to human life and all kinds of other sentiments that just make it hard. It reminds me in a big way of having to get on camera and talk to people around 9/11, and what do you say to take advantage of tragedy? And I don't think about it as taking advantage, but I do remember sitting on the bond desk at CIBC, and when the second plane hit, a bunch of clients came in and lifted the desk of 100 million plus bonds. It cost the bank a fortune when that happened. Before anyone realized what happened, a few sharp investors went and bought bonds, flight to safety and everything, and we know what happened in the aftermath of that. This to me, this event for Israel is their 9/11. On the 50th anniversary of the 1973 attack on Israel. I mean, the symbolism there of what's happened, but because it's that 9/11 event, when the IDF is telling us they're going to wipe out Hamas, believe them. They're not going to stop until every threat to Israel is gone. And sadly, that might mean an escalation in terms of, turning attention to Iraq and sorry, not Iraq, pardon me, Iran and the leadership there. That the mission statement of Hamas, the leadership in Iran, we don't believe in a two-state solution. Israel does not have a right to exist. Like that's so. When you look at the geopolitical issues there and the fact that the market really hasn't responded to it, I'm not surprised to see some of the risk metrics on Friday, go higher in terms of rally in treasuries, and see what gold did and crude oil did. And anyways, let's get into looking at some of those things. Fundamentally, the inflation numbers came out this week, PPI, CPI, the UMich sentiment surveys. And for the most part, everything surprised a little bit to the upside from expectations. In some ways more, in some ways less. The UMich one-year inflation expectations moved up. This specific survey asked people about their views on inflation, and literally if they paid more for gas 3 days ago at the pump, they say inflation's going up. And so the short-term expectation is tied in, but we had seen a downtick last month on the 5 to 10 year, the longer term, and now we're back up to 3. So, you know, there's something tied to oil prices there, which leads me to think about what's happening in the world today geopolitically and what that might mean, you know, inflation-wise. Fighting wars is expensive. There's now 2 major wars in the world right now, and you know, I think there's a tide shift in terms of inflation to the world, and I know there'll be those who kind of disagree with it, but you know, up for debate. So when we look at inflation expectations in the UMich 1 year, you can see that uptick there, and in recent months it was down, and so that was a positive, and inflation's falling and equities can rally, but we've seen what happened in recent weeks in terms of the reaction to the higher for longer messaging of the Fed and what happened to longer term rates. So this week and over the weekend, we saw several Fed speakers start to talk about longer term rates moving up, and that is tightening financial conditions, and they may not have to do as much. And of course, the bond market, well, whatever the Fed's done, pivots here, let's rip, let's buy. What I think's happening here, this is the MOVE index going back 30 years, and it's the VIX of the bond market. And so this takes every tenor on the curve and says what's the volatility of that part of the curve, and then kind of does a weighted index. And so it's the VIX of the bond market. And what you can see here of the last couple of years is that we've now moved back to what over the last decade or so, save for the financial crisis, dot-com bubble burst, interest rates go down, ZIRP, we have a suppression of volatility in fixed income, generally in a falling rate environment, where you go back and while interest rates were falling in the 90s, volatility of bond prices were up. And so I think that we can think about this, you know, here and, you know, draw that out over years here where volatility in fixed income is higher. So, you know, as always, the street will look at things like this and come out with new products. So this week we had launched a few new ETFs. Horizons ETFs have come out with a series of short, mid, and long-term volatility pay structures, which owns, you know, treasuries and writes covered calls and uses other kind of option strategies. They call it a dynamic option strategy to generate higher returns for clients. So this is interesting. But if you're really bullish on bonds, just go out and buy a strip and put it away, and it'll mature at par, and you'll make a pretty big, nice capital gain in your portfolio. And that's really a good way for a lot of people to think about fixed income now. If you're looking at maximizing your return after tax, these ETFs are fine. Great idea here. You know, 2 thumbs up to Horizons for doing these things, and they're going to be helpful for a lot of people. They're for yield seekers. They're not necessarily for people who want to protect their stock portfolios or things like that. But they're interesting yield plays, and so you know, good there. But it's a sign of the times, is my point here. So let's look at what happened in the long end of the curve with TLT this week. So, you know, last week we have this, you know, massive sell-off. We have this payroll report. You know, maybe I'll add one more day to this, just so we can see the Friday price action. So we had the extreme move off payrolls. You had a spike in yields, price down in bonds. TLT got down to a low of almost 84. As all will know, we had this big reversal pattern in stocks and bonds on the Friday. It continued on the holiday Monday with treasuries closed in the US and in Canada, but the ETF opened, proxying the futures market. And basically, we saw bond yields kind of fall all week. Now, when we blow this up here and we look at Tuesday, we had a 3-year auction on Tuesday. Remember, there's a lot of bond supply coming. That story is not going to change. So, bonds rally, and then 1 o'clock auction, weak auction demand, bond sell off. 10-year on Thursday. So again, rally, big gap overnight, risk off, sentiment, back it up a little bit into the auction as we often see. Results come out 1 o'clock, poor results, poor demand, gap down. Now again, light to safety, boom, rally into the close. Thursday, the 30-year. Well, you're not going to take down, if the 10 was bad here, the 30 needs more concession. So they sell it off into the 1 o'clock, and they sell it off pretty aggressively. And then the results come out. I have not seen a tail like that on the 30-year bond auction. I think you got to go back to the 90s, frankly, to see that kind of tail. So massive sell-off in the long end. Come in Friday, risk-off markets. Israel's going to get more aggressive. People leave Gaza City. We're coming in, and you get all kinds of risk-off metrics. And for the most part, even though we got some selling into the strength on Friday, ultimately the bid generally held versus the last couple of days. So all this back up, this bond is now back on side. Again, flight to safety has nothing to do with anything else at this point. Again, with the inflation expectations comes out, you miss here. Again, that was some pressure because inflation expectations went up, bonds sold off, but kind of held that bid, in this area through the day and closed pretty much strong, not quite at the highs of the day. So, you when you look at some of the other risk assets, gold, spot gold rallied, what was it, $50, almost $60 on Friday. That wasn't really falling interest rates. That's purely what if something really bad happens this weekend. This happened on the day where the US dollar was generally weaker. Generally stronger on the day, not weaker. And usually gold will rally with a weaker US dollar, but you had a stronger US dollar. Again, flight to safety was the message in the market on Friday, and equities really only started to peel off a little bit when we got that UMISH number and inflation expectations went up, and okay, now we can sell equities. Because the higher longer for message is still there in markets. When we look at crude oil, again, the initial pop earlier in the week off of the surprise over the weekend. Remember, we had been selling off. There was Saudi Arabia and Israel were going to come to peace terms. There was going to be an accord, and Iran apparently didn't like that idea. So one of the catalysts for this attack was clearly the Saudi Israel pact that was being contemplated, and that would lead to more of a peaceful environment. And again, Hamas does not believe in a two-state solution. They don't believe that Israel has a right to exist. And pretty much the whole free world, with few exceptions, understands that Israel has the right to defend itself. Hamas is not the Palestinian people. Palestine has a right to exist, and a two-state solution ultimately is the right outcome here for all concerned, except for the radical faction of Islam that doesn't believe that Israel has a place in the world. And that is fundamentally wrong. So what does that mean? Well, translate that into what you do for a hedge. So, last weekend after this happened, we commented, obviously, buy some energy exposure, add to it. I've got an option position to out 3 or 6 months now. I think it's around 6 months. Just to get some upside exposure. I think if we get the hard landing, which appears more and more likely, especially if oil prices spike here, and that causes some growth challenges for parts of the world should this war turn into a bigger escalation. And I think it's a 50-50 chance now that this thing escalates and that we get Israel dropping bombs on Iran and Iran launching missiles to Israel. And the last time we saw that, although temporary, last time, a couple missiles, this, again, the mandate of the IDF is to wipe out that part of Islam that doesn't believe they have a right to exist. And that's Hamas in Gaza, that's Hezbollah in Lebanon, both financially backed by Iran. If you don't see that or understand that, it's a huge dynamic that many, many people understand and are talking about now. And it has nothing to do with the human catastrophe that's happening, besides that. Anyways, I hate to talk about all these things as a strategy because of what's going on in the world, but it is what it is, and it's moving markets, and ultimately it matters. What I said last week in a tweet, you should never really change your core portfolio because of geopolitical concerns. Ray Dalio put out a piece about the changing New World Order. He wrote a book a couple of years ago, and he put out a piece on LinkedIn, which I tweeted today. So look at my Twitter or LinkedIn feeds if you want, and read those, or if you follow Ray Dalio like I do, you can go read it directly yourself. I think there's important discussions there on how this might play out, and his history study of the world on how shifts of leadership change in the world. And the biggest question I have for Ray is that if the U.S. is going to lose their control in the world for leadership, where is it going? Because just about every other part of the world, I think with few exceptions, is worse off or not large scale enough to become the next leader of the world. Something to think about. Anyways, prayers and hope it doesn't get a lot worse, but sadly, I fear that it will.